All right. I'm sure you guys can see my screen now. Okay, yeah, you can see my screen. So this is an example of how signals are going to come in. You understand? You can see the first one is limit order, long buy. SU is a token. I'm sure you know what a token is. It is SUI slash USDT. You can see your entry. You can see TP. You can see SL. So now I'm going to be explaining each term one by one. So now, when you talk about limit order, a limit order means you are placing a trade, but it's not activating immediately. That's you are setting a price. You understand? You just think of it. Hello, can you guys hear me?
I think we lost you for a while, but I can hear
Oh
you
yeah.
now.
Okay. So, like I was saying, a limit order means that you are looking to buy at a specific price, buy or sell, either buy or sell. You're looking to buy or sell at that specific price. So then another example, the example I gave is if you want to buy petrol, you understand? So you wait for it to come down to a particular price before you buy. So that price that you're setting is your limit order. So your limit order will be set at 500 naira, meaning when petrol now gets down to 500 naira, that's when you can now buy. In the case of sell, limit orders also exist in sell orders. As sell orders, let's say you bought fuel before. You understand? Or maybe you saw that you heard that fuel is going to go up, just the way these filling stations do when they hear that fuel is going to increase, or like that day that Tinubu removed subsidy. A lot of fuel stations closed down their stations and they were not selling because there's an indication that price is going to go higher. And when you sell at a higher price, you understand you're making profit. So when they set that price, that's what makes it a limit order. So in trading, you can sell a particular token, meaning that you want to say the token you are presuming that the price of the token is going to come down. So you are buying, you are going to sell it at a higher price. So when you sell it and it starts coming down, you're going to be making profit. You understand? I know it's kind of confusing, but with time you're going to understand. Sell order means it's basically just saying the price of this token is going to come down. Why buy order? Either long buy or short a long buy. What you're trying to say is that the price of this token is going to go up. So that means you are buying it. So you make profit if the price is going up. So sell order means like price is going to come down. So when you sell it, you're going to make profit when the price is coming down. Those are the two differences. And I've explained limit order. Limit order means you are setting a specific price at which you want your trade to activate. So the opposite of limit order is what we call market order. So market order, like the name sounds, it means that you want to buy or sell at the current market price. That means you are not waiting for any price to be activated yet. Whatever the price is currently at market price, you are going to buy at that price or you're going to sell at that price. That's what market order is. So that's the difference between limit order and market order. So most times limit orders are what we trade, you understand. But sometimes when you look at the chart and you see that the opportunity is already presenting itself, it's not like you have to wait for the opportunity or you have to wait for market to get to a specific price. You can see that market is already at the price that you know that it's a very sensitive price or a sensitive region on your chart. So you just place it as a market order and the trade activates immediately. A limit order, the trade does not activate immediately. It waits until market gets to your activation price, then it activates. But a market order, the trade activates immediately because you are activating the trade at the current market price. That is one. Then we can see you have entry, take profit, and stop loss. Now, entry, like I said, is your activation price. That is the price at which your trade activates, the price at which you enter into a trade. That is what entry is. Then your TP is your take profit. This is like, when you set a profit on, maybe you're selling something, you understand, or buying something, any which of them. So, but your profit is like the income you make in addition to your capital. Let's say you enter a trade with, like, let's say $10, and at the end of the trade, you now maybe got $30. You made an extra $20. That's your profit. So the price at which you want the trade to end. You want to close the trade, and that's why they call it take profit. That means you've seen that, oh, I've made enough profit. I want to get out of this trade now, so I'm taking my profit. So that price at which you are closing that trade and taking your profit is what they call the take profit price. Then you also have is SL. SL is what they call stop loss price. The stop loss price is that maybe you predicted that price of a token is going to go up. That is, you enter the buy long order. So, but instead of going up, instead of coming down against you, against the direction which you predicted it was going to go, you start making losses. You start making losses. So, but there's what we call a stop loss price, meaning that if market should get to that price, that means your trade is invalidated. That means your prediction is now wrong. You understand? So instead of incurring more losses, you just want to cut your losses and, like, go home with that and come back another day to try again. So because without a stop loss price, your trade will continue going down. You continue losing money, and at the end of the day, you might get liquidated. You lose all the money in your portfolio. So that's why you see people always say, don't risk more than 5% of your portfolio, don't risk more than 10% of your portfolio. What does that mean? That means that when you're setting a stop loss, let it be that what you're going to lose when price gets to your stop loss is not more than 10% of your portfolio. You understand? Although we are going to cover that deeper in another class when I'm going to be talking about risk management and strategies for managing your risk and all that while trading crypto. But for today, but I'm just going to show you how to navigate on the app. So I've explained how the terms associated with a trading signal, your limit order, if it's a long buy or a short sell order, then the token, you must see it must have USDT at the back. Now, this is what they call a perpetual contract. I'm going to go to the Bybit app shortly to show you all these things I'm talking about. The token, the pair we're trading is the derivatives. Let me quickly go to the Bybit app. Is the derivative. So you can see under here, under the bottom bar, you can see home, you can see market, you can see derivatives, you can see spot, and you can see assets. So once you open your Bybit app, this is where it's going to bring you to. Yes, so it's going to bring you here. So you can toggle through all these other options. So what we mostly trade is derivatives. Why? Because derivatives provides what we call leverage. So you guys, some of you might know what leverage is. Leverage means that you are taking advantage of something. That is, you are using something to give yourself a sort of a push, more than what it would naturally be. So what this means is that in leverage, there are different types of leverage. There's like 10x, 20x, 50x. What that means is that you can have just $100. Leverage can enable you to trade like someone that has $1,000. Yes, I know someone that has $1,000, when he's making profit, is going to make more profits. You understand? But the thing is that it also works both ways. It's like a two-edged sword. You understand? So if you're trading like someone that has $1,000 and you have just $100, when you're making profit, you're going to make profit like someone that has $1,000. But at the same time, when you're making losses, you're going to make losses like somebody that has $1,000. So normally, if a person has $1,000 is trading, maybe from one trade, he can get like $50 profits. Let's say he's doing his risk management, where he can get like $50 profit. Then you have sorry about that. You have $100, and in one trade you traded and it worked well because you use leverage, what they call leverage. Maybe you use X10 leverage, that's times 10. You're trading like someone that has $1,000, but you only have 100. You only had $100, and you made a profit of $50. That means you made 50% of your capital in one trade. That is great. But let's say that trade now went to stop loss. You understand? And maybe you risk $50 on that trade, just like the person that has 1,000 would risk. So imagine you have $100 and you lost $50. That means you've lost 50% of your portfolio. But that person that has $1,000 that lost $50, this person still has $950 to trade. That's why when you're using leverage, you have to be very careful and make sure that you manage your risk very efficiently so that you're not throwing away your money on just one trade, because trades can go in the opposite direction. It doesn't just go in one direction, it can go in the opposite direction. Even if your trade, your analysis is great and all, anything can happen. Things can just change. You understand? So you have to make sure you protect yourself and protect your capital, because the market is always going to be here. After you blow your account and lose your money, the market will always be here. So any profit you didn't make today, you make it tomorrow. You understand? So don't be in a hurry. This is not a get rich quick scheme. Please don't think that maybe after a week or two you will not arrive, go to your village and collect chieftaincy title or something like that. No, it doesn't work that way. Crypto is a journey. Trading, whether crypto, forex, or whatever type of trading it is a journey. And you have to be patient, you have to be disciplined, and you have to be hardworking also. So moving on, like I said, this is the home page that you're going to arrive at when you just log into your Bybit app. So these are all the whole sections. This is market, this is derivatives. So derivatives is what we call a perpetual contract. That is where the leverage comes in. So it's different from spot. I'm going to explain that shortly. But in derivatives, these are contracts that have already been coded, meaning that when you're making profits, with the leverage and everything, it's much more like an agreement. Like when you are buying, people are selling, and wherever the market goes, is the people that are going to make the profit, and people that betted that did bet against the market are going to be making losses. So that's a much more complicated thing. I don't want to confuse you with that, but is what they call it a perpetual contract. You understand? It doesn't end. That's what perpetual means. So derivatives, you don't own the token. In sports trading, I can see this is hamster token now. I can come and say, okay, BTC, go to trade. I can decide to buy the BTC token. If I buy the BTC token, I will own the BTC token. The BTC token will be mine. If the BTC token increase and I sell, I make profit. If the price of BTC goes down, I will be making losses. But I have the assets. The assets, Bitcoin or Ethereum or whatever coin it is I bought, the asset belongs to me. I have it. You see it in your assets box. But in derivatives, you don't own the assets. You don't own the asset. You only own a position. A position means like a bet. You understand? You bet that Bitcoin is going to go up, or you bet that Bitcoin is going to come down, or whatever token it is you are trading. So you don't own the position. So depending on the amount that you used to bet and your leverage and every other thing, and the direction in which the market goes, that will now determine if you're going to make profit or if you're going to make losses. You understand? But in sports, when you buy a token, if the price of the token comes down, you make a loss at that point in time. But if you didn't sell that token then you now waited, the price now came back up. That you are back in profit. You understand? So there's something, it was a little clip that, or I think a sort of a infographic I saw online. I think it was Warren Buffett. He was trading, he trades, and market, it was going against him. Like it was showing what they call maybe minus $10 million. Like they were telling the guy that you are losing $10 million now. So he told me that he has not lost anything. People were surprised that, guys, look like your trading is showing minus 10 million. You're telling them we've not lost anything. He was saying yes, because the trade has not closed. He has not closed the trade. He has not sold off. He's still in the trade. So as he has not closed that trade, he hasn't made any losses yet. It's until he now closed that trade or sold in loss, that's when he has made loss. So, and surprisingly, the trade now reversed. And somebody that was in loss of minus $10 million now became in profit of over $30 million. You understand? So that's how sports works. You understand? If you buy a token, if the price goes down, it will be looking like you're making a loss then. But if the price comes back up of that token, you've made profit. The value of your token has increased. So the difference between sports and derivatives is that in derivatives, you don't own the asset, you don't own the token. You understand? You only pay for a position. You only pay for a position that you bet in. Either you bet in the bull position, and you bet in the buy or in the bear position. But in sports, you're actually buying and owning the assets. Those are the two major differences. But for this class, I'm going to focus majorly on derivatives, which is the perpetual contract, but it's still similar, when it comes to placing a trade. But I'm just going to show you guys both of them briefly. So now, let's go on to how to place a trade using the signal. So there was a signal that was posted here. This one, you see, this signal is long by SUSDT entry and every other thing is given to us. So what you want to do, first things first, you want to do is go to the Bybit app. I said this is home. Go to click on derivatives. Then you would click, you can see just below this place are the road charts. Those are the road charts. You see Cloud USDT, CLOUD USDT. You click on it, it's going to bring out a list of all the contracts, all the perpetual contracts. Then you search for what you're looking for. You're looking for SU USDT. You can see it just came out there. So you click on it, it's going to bring out the chart. So the next thing you want to do is to make sure your leverage is on cross. Now, there are 3 different kinds of leverage, but this portfolio margin is a new one, because we don't really pay attention to that. The 2 leverages we pay attention to are isolated margin and cross margin. Now, I'll explain the both briefly. Don't try not to get confused. In isolated, what isolated means is that you are isolating every trade. Now, you have $100 in your account, right? And you want to enter into a trade, and you're like, okay, don't put more than 10% of $100 on each trade. So by the time you take 10% of $100 is $10. So by the time you take that $10 and put it on a trade, and if you are using isolated margin, what that means is that you've enclosed that trade. You understand? The only money that trade had access to is that $10. So no matter what happens, whether you get liquidated or not, as far as it concerns that particular trade, you are going to lose only $10 if anything like that happens. Then when we are learning crypto trading and all, we're all told that isolated is the best and every other thing. But the thing is that there wasn't a lot of knowledge back then. So a lot of people just assume that, maybe because people were getting liquidated anyhow while trading, you now feel like isolated is the best. You isolate that particular trade, even though that trade is going in loss, it won't affect the other money, your account balance, and every other thing. But when we learned more, we discovered that that can be true, but for some cases it's not true. So that's what isolated means. You understand? Whatever amount that you're putting into that trade, it's only that amount that trade is going to have access to. But in the case of cross, for like the example I give, I have $100 in my account, right? If I risk $10 on a particular trade, that since I use cross margin, that trade has access to all the money in my account. By access, I mean that it is still connected to that money. It is still going to draw liquidity from that money. It's still going to draw. Okay, now look at this. When you're trading, either you're making profit or you're making loss, it's going to be referred to as what they call unrealized profit. That's when you're trading, you see beside it, they write unrealized P&L, which is similar to the example I gave about Warren Buffett losing $10 million. And after some time, his loss got to 30 plus $30 million in profit. You understand? So that minus $10 million that was showing reading there when the trade was still on is what they call an unrealized loss. Why is it unrealized? Because that trade is still ongoing and it has not closed. It's showing that, this is still unrealized. Okay. Even when you are in profit, as soon as you've not closed that trade and you are showing that you are in profit, it's still unrealized, meaning it has not entered your hand yet. So that's why they'll tell you that any trade, any profit that you've not closed is not your own yet, because you can always go. Is that why they call it unrealized? Now, when trading, when you are losing money, maybe you are your trade is going in loss, and you have what we call unrealized loss. That unrealized loss is regarded as a debt. So now you're trading on Bybit, you risk $50 on a particular trade, and you're already in loss, like let's say $20 minus $20 in loss. You understand? That money now, it has not been taken from your account yet, because that trade is still ongoing. So that loss will be regarded as unrealized loss, and it's regarded as a debt. So, and the amount of debt that you can have while trading is it varies directly with the amount of money you have in your portfolio, especially when you are using cross. You understand? So depending on the money you have in your portfolio, you have in your portfolio available, that's the amount of debt that you can take. You understand? So when you use cross, it increases your debt range, meaning that even though you risk just $10, 10% of your account on that particular trade, that particular trade still has access to the rest of the money to increase its depth range, meaning that it can hold a lot of debt before it gets liquidated. So that's why liquidation is 80%. By the time your debt is now up to 80% of your entire portfolio, I mean the money you are losing is now up to 80% of your entire portfolio, you automatically be liquidated. What liquidation means is that your trade will just be closed. That trade will just be closed and you will lose your money. Maybe if you had like $100 in your account, you come back and be seeing like $10 or $15 at most. That's when people say you've been liquidated. You understand? So that's what it is. So what cross now helps you do is that it helps you. That's why when you're trading, you see what they call a liquidation price. That liquidation price is the maximum price that can accommodate that your available balance in your account can accommodate if the market were to go against you, if you were to be making loss. So if you're using cross, you understand that trade will have access to the whole money in your account. So that's your liquidation price. The depth range is going to be large. You understand? You can put your stop loss, and your stop loss will not be too tight. Some people will be like, don't make your stop loss too tight because market can just run, take your stop loss and start going in your direction. Then it will be very painful that after market has taken you out and you lose, it has not started going in the direction in which you predicted it. That's why your stop loss has to have breathing space. If your stop loss have breathing space without you getting liquidated, you understand, you have to use cross leverage so that that particular trade can have access to every other fund in the wallet. But when you're using only isolated, and you now put only $10 on a trade, you see that that trade will be choked up because that trade only has access to $10. So your liquidation price will be very close to your entry price. If you're not lucky, say, but another example, they just enter trade. Within 5 minutes, they'll say they are liquidated. They don't know what happened. Maybe they went to use isolated, or they didn't do their risk management well, or something like that. So these are the common mistakes you have to try and avoid. People do use isolated, yes. People do use isolated. These people are people. I'm sure most of you must have, maybe when BTC moved mad or something, must have come online and see where one person tweeted $10 billion liquidated from the crypto from Binance, $100 million liquidated from Bybit and stuff like that. You'd be like, why are people losing this money? Most of the people losing that money are people that use what they call isolated margin. You understand? People that use isolated margin are people that have a lot of money. You can have like maybe $50,000 in your account. Those people don't use stop loss because they're not looking to make losses. No matter how low the market comes down, let's say they are on a buy. So no matter how low how much loss they make, they believe that market is going to reverse and go their way, and they make profit, and they get out of the trade. But in days like that, where there's a spike in trading, where you see a massive, what they call a god candle, a massive candle, if you're unlucky and that massive candle moves against you, in a direction that's against the direction in which you predict the market, that's where you start seeing people that do not start getting liquidated because the price like moved so fast, and in the opposite direction, that it went to their liquidation price. So now when you're trading, you see that by the time you have a lot of money and you use isolated on that trade, maybe you are just isolated $10,000 on one trade, you see that your liquidation price will be very far off. So in your mind, you feel like there's no way market can get to my liquidation price. So you won't put stop loss because you don't want to you want, no matter how low you get, you still want it to come back up and move in your direction. You put stop loss, but that day you will not know that that's the day a god candle is going to appear, and it's just going to snipe your liquidation price. You come back and you've lost all the money in your wallet. So that's basically the difference between isolated margin and cross margin. So especially as newbies, I always advise use cross margin so that you don't choke your trades. You understand? Cross margin is actually the best to use. So, like, it's already selected. Then the leverage. So for this class, I would advise don't use more than 10%, please. Don't use more than 10x. Sorry, I said 10%. Don't use more than 10x leverage. In subsequent classes, I'm going to teach you how to use higher leverages and what to do to make sure that your trade is still risk proof, and you're not just taking any unnecessary risk. But for now, don't use more than 10x leverage, right? Safe, good. So those are the first things you can do. Make sure your margin is on the cross margin and your leverage is 10x. Then the next thing you want to do is put in your order price. Now, from this signal that was given, the order price is the same thing as your entry, was 1.1609.
Hi,
One
Solomon.
point.
Can you pause for a bit?
Yeah, I can hear you.
Yes. I think we are having a lot of feedback, right? People are saying that they can't hear you. So I don't know. Let me give someone the mic so that. Hi, Joy Kalu. How are you doing? Hi, Joy Kalu. How are you doing? Um, I don't know what's the problem, but a lot of people are complaining that they can't hear you. So what
But
do you
can
think
you
is that?
hear me?
I can hear you loud and clear.
Then it should be their network. It should be their network, not mine. Since you can hear me, so it should be theirs. I know that network is bad, but I know it hasn't been bad for since I was talking. So maybe it's from their own end.
Okay. Sorry for interrupting. You can continue. Probably.
All right.
They can listen to the recording at the end of the class.
Yes, exactly. So let me just keep sharing my screen. So, like I mentioned earlier, let me cancel this. So the entry price was 1.1609. So you put that here, 1.1609. So the next thing you want to know, this is basic, how to set your basic order value. Like I said, I'll still come again to teach you guys risk management. I just want this to enter your head well and it doesn't sound too complicated. So you just move, like we've been crying, don't use more than 10% of your available balance. You want to place this trade now, just move this thing. Normally, if I'm trading, I don't move this, but as for newbies, I want you guys to understand how this works. See what happens when you trade with it first, so you understand how it works. And also, this shouldn't be more than 10%, because this is 10% of your available balance, right? So you make sure you move it, stops at 10%, and you're good to go. Next, you want to do is make sure you put your take profit and stop loss. So this is for long buy orders, and this is for short buy orders. But since we're trading a long buy order, so leave it on here. Our take profit was 1.2310. Put it there. 1.23. Yeah, stop loss 1.13. 1.13. You confirm that. So next you want to do, since it's a buy order, you understand? It's a buy long order, you click on it, buy long. Then you confirm all the details, then you click on confirm. That's all. That's all you need to do when you want to place a trade using these signals. Just follow the steps. Select limit. Since the limit order, I talked about limit order. Since the limit order, you make sure you select limit order, put your entry price as your order price. Then move this, let it be 10%. Don't use more than 10%. That's the advice I'll give you. Even at 10%, at least for a start. Still, you need to learn what happens in the market, how the app works, and every other thing. You understand? It's more like a practical. So you just don't go there fully. So you have to first understand how it works. That's why I want you to work it out with 10%. Then you put your take profit and stop. Like I said, it's a long buy order, so you put it here. It's a short sell order, you come here and put it there. So that's basically how to enter the trade using a signal, a long buy signal. So let me quickly show you guys how to trade spot. So it's basically the same thing. Let's say you want to buy BTC here. If you have a price, you want to buy it at, maybe you want to buy it at a lower price, select limit and you put the price at which you want to buy it, put the quantity you want to buy. You understand? Based on how much you have. you want to put there. So this one is not like you're putting here based on the quantity. So here now you can see my available balance here is $44. So if I move this here, you understand, that's like $20. If I move this here, you understand, depending on if I let me put another price. Let me put 60,000. So if I move this here, that means I'm using 50% of my account balance to buy BTC. So this one, I'm buying the. This one is not. It's not buy long. It's not perpetual. I am buying the asset. Think of it as think of it like you're going to go and buy dollar. You're going to go and buy something that you are going to hold. It's a tangible token. You understand? So you are holding it, and later on you can still go and sell the token. This is not like a contract that you are entering and with leverage and every other thing. No, this one you are buying the token. So you just select the price at which you want to buy, or if you want to buy at market order, you can select market, that buy at the current price. Move this to select how much you want, or you just move it here. How much you want to use, depending on how much is in your available balance, you know how much you want to use to buy. So 50%, 70% of your available balance used to buy the BTC and hold it, and you can still sell later on. The same thing if you want to sell, maybe you have BTC you want to sell. If you want to sell it at the market order, is 63,000. But let's say you want to say that you have news that BTC is going to get to 70,000. You want to sell your BTC at 70,000. The same thing, you just put the price 70,000, put the quantity. How many of your BTC you want to sell? In this case, that means you already have BTC. You want to sell to USDT. You understand? So this is for spot. Basically, spot means you are buying and selling tokens either at limit orders or at the market price. So let's get back to derivatives. So we'll give an example for long buy orders. Then we're going to give another example for the short buy signals that we created. So this was a short sell signal. This is Cloud USDT. So like I explained, you come back to your Bybit app, click on this place where they wrote the pair. As you can see, SUI USDT below charts. Click on it and type Cloud USDT. You can see it there. So it's the same process. Cross. Make sure the leverage is just 10x. Don't use more than 10x for now. Put it at 10x. Your order price, your entry price, you can see here is 0.4495. Put it in there, 0.4495. Your order value, like I always said, 10%. Also, understand? Then your take profits is a short sell order, so you're not going to come here, you're going to be here in short. The take profit was what? 0.3339. Then your stop loss was 0.461. And see it, so you confirm. Then what do you want to press? You are not pressing the buy long because this is a short sell order. So you click on this sell short. Can you see it? Then you confirm it. And it will go and stay in positions. Whenever you set a limit order, it's going to go to positions. You understand? You can see that SUI and Cloud I just entered. They are going to stay in order. So when price now gets to that entry price you set, it will now activate and come under positions. It will no longer be in order, it's now be in positions. So that's the way it works. So if we were to enter a market order, it's the same thing. Make sure it's cross margin and 10x. Then click on display zero limits. That has a drop down arrow. Then you select market. You understand? Order value, just like normal 10%. Then you put your take profit and stop loss that you are giving. In every signal that we posted to the group, you're gonna be notified if it's a market order or if it's a limit order. If it's a market order, you know that you just select markets from here, move this to 10% of your guys. This bar, make sure it's at 10%. Then click where they wrote TP/SL, click on it. If it's a long buy order, you put the take profit and stop loss that you're giving. If it's a short sell, you put the take profit and stop loss that you're giving. Confirm it, then click on it. Are you buying or you're selling? Is the buy is the green, the red is the sell. All the details of the trade will be provided for you on the chart, on the signal that will be sent. So having said all this, before I move forward, I would like to answer a few questions. So if you have any question, just signify by raising your hand, and we'll answer it, and hopefully others will learn from it. Fabian, are you there?
Yes, I'm here. I can hear you.
All right, all right. I think some people are raising their hands. They have questions, so let's let them ask.
Okay. So Joy, you can go, right. You can unmute your microphone and speak. You can ask your question now. Hello, Joy Kalu. Hello, Winner. If you are raising up your hand and you want to ask a question, right, I'm going to allow you to speak. So the only thing you need to do is to unmute your microphone and ask the question, right? So now, all things airdrop, Winner, and Maniru. Okay, Maniru, you can go. You can ask your question now. Hello, Solomon. Can you hear any of them?
I can't hear any of them. Oh.
Okay. Good evening, everyone.
Yeah, evening, Winner. How you doing?
I'm fine. Please, I know what I just observed is that I, I just, I just see this message few hours ago. You understand? So I just got to come and listen to it. But I know it's as important as whatsoever I can even think about it, because I've been even thinking, how do I get to learn how to trade derivative? So I wasn't all that prepared about as in going through all this kind of sitting down to listen to it live. I'm just doing screen recording. Maybe later I can just get to watch it again. So I wanted to just put a request, if it can be possible, then this thing, the secret can get to be revealed, like they do this kind of practice again, maybe either thrice in a week or anyhow. It might not just be once before they start sending signal, because at least someone just got to, as we are also seeing, then we also put into practice, so that he can just have time to go into the main stuff. You understand? So my own was just like a suggestion. So I don't know how that really sound to the admin. So but I really wanted something to be done about it. You understand?
Well, this class is being recorded, so it's going to be posted on the group for anybody to always have time to go through it. So this won't be the only class that we're going to have. This is more like an introduction. You understand? So we're going to have another class. You understand? So and where we are going to go higher in the knowledge. I think our next class we are going to be, I will have, depending on the schedule, is going to be on risk management. Now, what I just showed you now is just the basics on placing trades, what you need to know, the terms and all that. So when we now get to risk management, you now start learning, calculation and all that. How to make sure that you're not losing more than what you want to lose and all that. So that one is much complicated, much more complicated than this. That's why I want us to do that separately and not now. So, but don't worry yourself about that. We are gonna be here for some time, until at least the people that are actually serious would actually get the knowledge, that they want. As far as you follow up and you watch the videos, even though you don't come to the class, well, I'll say it's better you come to the class so that you can ask questions. So, but these videos will be posted on the channel. Anybody can go back there anytime, rewatch them, and learn maybe what you missed the first time.
Okay, no wahala. I got to. Thank you very much about that.
All right.
Okay.
Fabian, are you there?
Yes, sorry, I was muted, right? So, alt in airdrop, Ovin or Joy Kalu, you can ask your question now. We have limited time. Please be fast. Just go straight to the point, right? Since I have to bring another person online, since none of them is responding. Okay, over to you, Kogi boy. Kogi boy, can you hear me? If I allow you to speak, right, the only thing you need to do is unmute your microphone and ask your question. Kogi boy, can you hear me?
Good evening, sir.
Yes, and good evening. How are you doing? You can ask your question now.
I'm good. Please, I want to ask something about the candle stuff. Please, what's the best candle? What's the best candle to know, like if market is going up or come down? Hello.
Okay, if I got you right, your question is, what's the best candle to know? The best candle that'll tell you if the market is going to go up or is going to go down, right?
Yes.
Okay, over to you, Solomon.
Okay, all right. So basically, the class today was to just show you guys how to navigate the Bybit app and be able to use the signal. So now what you're asking is much more related to technical analysis, but I'm going to, see explain it to you. So now
Thank you.
in trading, there are two types of candle. We have what we call a bearish candle, then we have a bullish candle. So when you say bullish, it means up. Then when you say bear, it means down. So bullish candles are categorized with a green color. You see, in most charts, the bullish candles are the green ones, which is showing that price went up from the previous candle. While the bearish candles are the red candles, mostly red, which is categorized that price went down from the previous candle. So you have to know whether price is going to go up or come down from candle. That one is a different ball game entirely. And maybe as the course of these classes progress, we'll look more into that. But basically, the green candles are bullish. That is showing that price is moving up, while the red candles are bearish. That shows that price is coming down. Let me quickly share my screen so that um, you can see what I'm talking about there. Now, look at this chart now. You can see, look at this chart. You can see there's red candle, there is green candle. So any candle that is green, you know that the candle closed above the previous candle. For example, look at this green candle now. The previous one was red. Previous candle was red, while the next one was green. Why? Because the candle closed above the open of the red candle. So now a red candle has, I don't want to go into that today, but I'll go into it where I will explain what the parts of a candle. You understand? We talk about the open, the close, the head, the neck, the body, the wicks. You understand? I explain what they all mean. So let me not confuse today, but just know that green is bullish and red is bearish.
Okay, thank you,
Do
sir.
you understand? Yeah.
Yes.
Okay, I think after Rejoice question, right, then you continue, Solomon. Rejoice, can you hear me? Hello, Rejoice, can you hear me?
Yes, I can hear you.
Okay, you can ask your question now, right?
Good evening.
Yeah.
Please, I wanted to ask, I was not really following when you talked about limit order. Please, can you revisit a bit?
Okay. Fabian, I think I, what I've been explained, I think that will be all that will be taught tonight, because I don't want to overwhelm them all. Since the video is going to be posted on the channel, they can always go back, watch those videos, and practice. Bybit has a demo. Bybit, even though you don't have money to start trading now, Bybit has a demo that you can go and practice. You understand? Even when signals are posted, you can go to demo and practice and see what happens, right? So after what today we're just gonna we've talked about, okay, we've not talked about deposit. Okay. After this question, I'm gonna go into deposits, meaning how to deposit funds in your trading account. So let me quickly answer Rejoice's question about limit orders. So, like I said, limit orders is like setting a price. You are not buying at the market price. You understand? I'm trying to look for a very good example. The example I used before was fuel. You understand? You want to buy fuel, but currently fuel is at 1,200. So maybe you will now tell me, let's look at do you this. So you now tell one small boy that, oh, stand at this filling station. Oh, whenever the price comes down to 500 naira, please call me so that I can come and buy. That's basically what limit order is. That is a price that you want to buy at, that based on your analysis, you know that price is the best price to buy at, but market hasn't gotten to that price at that current time. So you have to wait until market gets to that price. So, but instead of waiting, because you might not be with your phone or your laptop to place the trade when market finally gets to that price. So you now have to automate it. So the process of automating it is now where you now get limit orders, meaning you set the price is your limit price. You set that price automated. So even if you are with your phone or your laptop or not, the moment market gets to that price, your trade will activate. You understand? So it's just like telling that maybe you give that boy now that you put at the filling station to wait, you give him money, you give him jerry can, that the moment the fuel price gets to 500 naira, please buy 5 liters for me, buy 10 liters for me. You understand? Even if you are at the filling station or not, the boy will buy it for you. So that's the way limit order works. I don't know if that answered your question, Rejoice.
So what if you place the limit order? I mean, like a year, the market price has not still gotten to that 500 naira.
Then you know that that price is not a, how will I put it?
Yeah.
It's not valid. You understand? You know that price
Yeah.
is not valid. Then sometimes it might take longer. They are depending on how you analyze that trade. If you analyze the trade using, I'm trying so hard not to use some terms so I don't confuse people. Now there are different time frames. You have a monthly time frame, daily time frame, 4 hours time frame, 1 hour time frame. So if you use a monthly time frame to place a trade, you will know that trade, it will take a lot of time for it to come to your entry. So the lower the time frame you use, the faster it gets activated. You understand? If it doesn't get activated, you understand, let's maybe you use like a 1 hour time frame, and after like 2 days or even a day, say if your trade does not activate, then you know that zone is not a valid zone of entry. You cancel the trade and wait and see what market does and find a new entry. So that's how you will know. But if you do your analysis well, price must definitely come back to that zone. Is either it comes back to that zone and move towards your profit area, or it comes out to that zone and takes you out in stop loss. But it's on rare cases where price won't ever, it happens that price, you set a limit order and price market will never come to that price for a very long time. You understand? So by the time you've held a trade 1-2 days, especially when you know it's not a swing trade, there are some swing trades that before you activate, can take like 2 weeks for that trade to activate. Those are what we call swing traders. Swing traders are traders that like stay in the market on one particular trade for a long time. So when you know that trade is not a swing trade and it has lasted more than 2 days, didn't activate, then you know that you just have to cancel that trade and look for a new entry. You understand?
Yes, sir. Thank you.
All right. So before we go, let me just quickly talk about how to deposit. I don't know if you guys know that yet, but still.
Okay, Solomon, just a minute before you continue, right? Um, just to put this out, right? This class is very important. I remember when I studied cryptocurrency in 2020. It was very challenging. Nobody is going to take out his time to teach you all these things. Everything you're hearing today might sound so overwhelming. Limit order, market order, and so on and so forth. But take cognizance of this word, right? Over time, they will all make sense. And according to so many analysis, right, historical price movements, the market will hit up from October upward, right? This is not a financial advice. Nobody will have time to start teaching you all these things. Now it's more of like a meme season. Everybody's on Telegram, grinding for CA, looking for the next alpha, and so on and so forth. So take advantage of all this information you have. At least you have the opportunity to interact and to ask things that an expert will give you clarity on that. Solomon here has numerous years trading the crypto market. You have the opportunity to learn from him. So everything you are hearing here, please take it very important. If you are to host a one-on-one class with Solomon, I know how much he's going to charge you. This is a lifetime skill, a skill that can liberate you forever and ever. When you learn this today, it's something that will help you forever and ever. So take this class, very important. I'm surprised that we just have only 100 people in this class. Though it might seem very simple, but overall, this is just more of like the basis, right? It's going to build on it. The next class will talk about risk management, which is a very important aspect in cryptocurrency. So make sure you take everything very important. After the whole class, write things down. When you write things down, you can go over it. You can do more research on it, then you get more clarity. This is just to put this out, right? And don't forget, at the end of this class, we have a small giveaway. So ensure you stay till the end of this class. And if you are new to Bybit, if you are new, you don't have a Bybit account, ensure you check the pin post, sign up using the link. You also get a 500 USDT position. So this position, right, if you don't want to risk your equity, you can use it to test run the market. It's free. You just need to take certain action, right? Bybit also has a demo account. You can practice some of the things you see here, some of the signals you see here. Take these things very important. I don't know how much I should emphasize this. Solomon, over to you.
All right, Fabian, thank you very much for that. Like I said, anywhere you see free information, you have to take it very seriously. A lot of people don't take information that is free very serious, but if you are wise, you take it seriously and take advantage of it. So let me quickly show you guys how to access the demo trading platform on Bybit. I think Fabian just mentioned it now and reminded me. So once you come to your home page like this, you click on more. You can see there are a lot of options. You can see rewards hub, P2P trading, Bybit and buy crypto, leverage trading, OTC trading, MT5. So you click on more. Then you scroll down, and you look for where they wrote demo trading. You can see demo trading here. Under trade, there are lots, but on the second to the last line, second to the last row, you can see demo trading, OTC trading, arbitrage, easy options. So you just select demo trading. So when you select demo trading, you'll be given $100,000. It's not this demo money, it's not real money. So they use it to trade. You can trade derivative, you can trade sports, you can use it to practice, and everything you've learned, you practice it on here. And if you want to go back to normal trading, you click on here at the top right where they wrote start live trading. You just click on it and you go back to the normal Bybit. So if you want to deposit funds, you come to assets. So when you come to assets, you can see deposit, withdraw, transfer. So there are two main ways to deposit funds on your Bybit platform. One is that's when they send a token to your wallet address. So if I click, the second one is P2P. I'm sure you're all familiar with P2P, where you'll be paired with somebody, you'll pay the person Naira, and the person will credit you with USDT, your Bybit wallet. So once you just click on deposit here, you can see the first deposit crypto, that's the last one. You understand? You click on it, they ask you which token you want to deposit. You come come up here, search USDT. That's what people deposit mostly when they want to trade USDT. So select it, USDT Theta. Make sure it's the Theta you selected. Theta. So you choose the chain. Now there are different chains. These chains are like the blockchains, you understand, that USDT exists on. So depending on the chain that whoever wants to send you the token is requesting for, there's an ERC20, which is the Ethereum chain. You have the TRC20, which is the Tron chain. You have the Arbitrum one. You have the Sol chain. You have the BSC, which is the Binance Smart chain, and a host of many other chains. So most people normally stick to TRC or BSC because they are faster and they are cheaper, right? So let's say we want to use BSC. Maybe the person that wants to send you the USDT requested for BSC chain. So you just select BSC. It brings out the address. Please confirm your depositing. These are all confirmation boxes. Click OK. Then you click on copy. You can see the wallet address. Just beside the wallet address, see something like 2 boxes there. Click on it. It has been copied. So this wallet address that you just copied, you send it to the person that wants to send you the USDT. And when the person sends it, in about 5 minutes or less, you're going to receive your tokens in your wallet. That is the first one. Then the second way to deposit is using P2P or direct depositing. Once you click on deposit, you can see P2P trading, buy with NGN. Let's say you select buy with NGN. Select how much you want to buy. Let's say you want to buy 50,000 naira worth of USDT. And you click next. And you select payment, bank transfer. You want to select bank transfer. So buy with NGN, confirm. You just be confirming it. Then it's going to pair you with somebody. You understand? It's going to pair you with somebody that you want to pay. So all you just need to do is click on pay now. Once you click on pay now, it's going to bring out the account number. You pay the money, that the requested amount is 50,000. You send the money, transfer that money to that account number. Then you click that you have transferred the money. Then once the person, that's the vendor, confirms the money, the vendor releases the tokens into your wallet. Then the tokens will now be in your wallet. So those are the 2 major ways to deposit funds into your Bybit wallet, into your Bybit wallet. Let me just cancel this order. So those are the 2 ways to deposit into your Bybit profile. So anyone that benefits at that particular point in time, you just go ahead with it. So I don't know. I'm trying to see if I forgot anything for today. This is already almost 10:30. So I guess that's it. I don't know if there are more questions. For those that want to start trading immediately, that's why I'm showing you guys how to deposit. So you can make deposits, and once the signals have been posted, you can get on trading. For those that want to use demo, can also use demo to start, seeing how the signals work, using them, practicing and all. I think some people still have questions. So Grace, David, and Ovine.
Okay. David. Okay, David, you can ask your question now. After David finish.
Okay. Okay. Good evening, boss. Sorry, please. My question is, how how time sensitive is the signals that you are going to be dropping? Like, for example, now this message that you just sent that we should join. I saw the message very late. So imagine now you send a signal, for example, in the morning. If I see it around 6 o'clock, or let me just say 3 in the afternoon, can I still like activate, like do that signal, is it still possible, or is there like a particular time frame that this signal is valid? Please, I don't know if you understand
Well,
my, if you get my
I,
question.
I I get you, but in trading, there's no validity of time or anything as per when it's trade to activate. The speed of market, it's determined by volume. You understand? Volatility is determined by volume. That is the number of people trading at that particular point in time will determine how fast the market will move. So the thing is, when any figure is posted, if it has activated, it will be said on, it will be notified on the group that such signal has been activated. So once the signal has been activated and you missed it, there's no need chasing after it. Just wait for the next signals. If it has not been activated, you will see that it has not been activated. And if maybe it has been on for too long or it's invalidated, you'll be asked to cancel the signal. Or if it has hit stop loss, you'll be told that it has hit stop loss. And also any information regarding the signal will be posted so that anybody coming in can know what to do, whether it comes early or comes late, and sees the signals.
Okay, thank you, sir. Thank you very much.
Okay, over to you. Who's the next person online?
David Hazan, I think.
I think David Hassan just spoke. Grace, where is Grace? Okay, early network, right? How many more questions can you take, Solomon, before we call it today? So that let me know how many people I'm going to allow to speak. Hello, Solomon,
By
can you hear me?
by 10:30, we close now.
Okay, we
We have
five
like
minutes.
5 minutes more, yeah.
Okay, yeah. So in case you missed what was happening, right? So today basically Solomon did an overview of how to navigate the Bybit app, how to place trade, talk about the limit order, market order, talked about isolated margin and cross margin. And in the next class, we'll be talking about risk management, which is one of the most
Hello?
important to know in cryptocurrency. Can you early
Yeah,
network, over to you. I'll
yeah,
just give you a recap of what's happening. So you can ask your question
yeah,
now.
yeah. Good evening. Good evening, all.
Yeah, evening.
Uh, I didn't join early, actually, but I got to record some of the things Mr. Solomon just said concerning the demo trading and all of that, okay? There is this channel I also joined recently, but it's a kind of confusing, but what Mr. Solomon just did now, it gave me a breakdown of everything, okay? Because they'll just send signals to you. They will not even tell you how to place a trade, how to position yourself, stop loss, and all those things. But I've really learned a lot from Mr. Solomon right here, okay? And I really want to appreciate it. But there's another thing. I usually use Binance and Bybit. I'm new to crypto. I'm new to the crypto space actually through airdrops. Okay, and I also want to be a professional trader. Like actually, I can even pay for it. Like if I'm asked to pay for it, yes, I can even pay for it because I'm trying to position myself for the bull market and all those things. I've made some researches and all. And my point here is just a request, a little request. Okay, I'll really like Mr. Solomon to give us a list, at least 5 meme tokens or altcoins, like coins we should hold for the bull run. Okay, that's just a little request I'm trying to make. Okay, I don't really know if that suits what he really wants. Okay.
Me, I don't used to give financial advice, so before people will not gonna say it's Solomon that told me. But one thing I'll tell you is that if you want to hold any altcoin, maybe the ones that are popular, I would advise that you don't hold maybe things like Bitcoin, Ethereum, these ones that are already popular. I won't advise you
Yeah.
to hold those ones because you won't get a lot of profit on it, except maybe you have money. People that invest in Bitcoin are people that invest hundreds thousands of dollars and above. So that by the time, because Bitcoin is already a very expensive coin, so it doesn't move it doesn't move so much. The most you can see maybe in a month, you'll be seeing like, let's say, a 30% movement if it happens well. So imagine you have $1,000 after waiting for one whole month. You have now have 30%, like $300. And when you are holding tokens, you are looking for all those 10x, 100x, and also you won't easily see all those 10x and 100x in those altcoins and stuff like that. So you just have to look for coins, especially new coins that have just joined, that have just been updated. All these new coins that are coming in with all these airdrops, all these many hamster, especially on the Ton network. On the Ton network, there are going to be a lot of coins that are going to like give you all those 10x, 100x and stuff. So just look out for those ones, because with those ones, with as little as $10, $20. By the time it does like 10x, you have $200. 100x, you have $2,000. You understand? Remember the last bull run, I know people that with less than $50, they made hundreds of thousands of dollars. You understand? Because of all those 1000x kind of things. You can't get those kind of movements in regular coins. You have to look for coins that that look like they don't have any potential now, but in the future, they can be very hot. Yeah. So I cannot give you any 5 lists of any coins because please, I don't give financial advice. So I can only tell you what the market is saying, what the future seems like it's going to look like. Then from there, you can make out your what you want to invest in. But maybe by the time we get closer to that time, you understand, from the way market is looking, we might be able to say, okay, do this, do this, do this. But I don't think we are there yet. For me, I don't think we're there yet.
Okay, and
Okay.
to add to that, right? Early network. I think you are trying to put the the horse before the cart, right? After the risk management class, people have different risk appetite, right? So it's not wise for you to start investing into tokens now without understanding the risks involved. Like for instance, right, I have a very huge risk appetite. For proper context, when I was working as a personal assistant in 2022, I was risking more money than the person I was working under. I was risking more money than my boss. So people have different risk appetite. So after the risk management training, you get insight on how to risk your capital. So what I'm trying to say in this essence is that when it comes to holding of tokens, like Solomon stated, there are people that also want to buy large cap cryptocurrency. Like Bitcoin, you agree with me that the volatility is low. I can put $10,000 in Bitcoin and expect just $1,000 return. But there are people that want to put $50 and they want $500. But you are taking a huge risk, and the probability of your investment going to zero is higher. So after the risk management class, you get more insights on how you can deploy your capital and how you should deploy your capital. After that, then we can start. Then during the bull market, like if the market start eating up, right, we can provide insights. By the end of it all, everything boils down to your risk appetite. Do you understand?
Yeah. Thank you. Thank you very much. Okay. I
Yeah.
really love this class. Okay.
Okay.
And what one more question
Can
before
I?
I
Can
sign.
okay. Okay. Now, please. My own question is this. Good evening. Thank you so much for the opportunity. I have just two questions. I have just two questions. My first question is, I heard the first person that asked question was talking about a signal dropping platform. Now, I came into the class late, and it seems that I missed that information. Please, could you like rephrase that information? Maybe there's a platform in which there will be a signal dropping daily or what? Now, my second question is this, please. If I'm to like practice trading by myself, which time frame will you recommend for me? Like, which time frame will you recommend best for me, and which trading strategy? Is it because is it scalping strategy or maybe a long term strategy? Please, those are my two questions. Thanks.
Okay, so this will be
All
the
right.
last question. Over to you,
Yeah,
Solomon.
yeah, exactly. So, for your first question about the whole signal thing, whatever the signal is going to be posted, I think it will be communicated to you guys in the channel, so you can just follow from there. Then for the trading, there's no one um maybe time frame that you say you use this one to trade and all that, because all time frames serve a purpose depending on the kind of trader you are. You understand? So, like Fabian just mentioned before, talk about risk appetite. You understand? Everybody has different psychology. We all have different upbringings. We all have different mentality. And there are people that are very patient. They can wait for one whole week. You understand? Just to make $100 while trading. And there are people that are not patient. They want to be making like $50 like 3 times in one day. They just want to go into the market, make profits, go out, look for another opportunity, enter, make profit, go out. You understand? So depending on the kind of trader you are, that kind of person that you just want to be making profit fast, 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 fast. That is your kind of person that you are. You are not a patient person. And you know that you do better well as a scalper. And if you're somebody that's you are very patient, you can wait for the whole thing to unfold the way you want it. And you can go as a swing trader. So depending on the kind of trader you are, will determine the time frames that you're going to use. Someone that is a scalper now, you will not go to the daily time frame, or you hardly go to the 4 hour time frame. Self. It's from the 1 hour time frame down. He's going to be looking at. You understand? Because the lower the time frame, the faster the price movement looks. You understand? So depending on the kind of trader that you think you are, if you're a scalper, if there are even investors that can wait up to like 3 months on one particular trade. In the sense that people that are using hundreds of thousands, millions of dollars to trade. You understand? So everything boils down to the kind of trader you are. But every time frame tells a story. For example, now let's say somebody that is a day trader now. A day trader is somebody that maybe a trade can last a day or maybe 2 days. You understand? You know that you have to look at the daily time frame and the 4 hour time frame to get your bias, meaning to know what direction market is moving at. Is market moving bullish? Is market moving bearish? That's where you get your time frame. Then to look at regions to target liquidity and structure and all that, you get that from your 1 hour time frame. Then by the time you want to get your entry models, you know that you have to come down to 15 minutes time frame to look for your entry models, you understand, and refine your entries and all that. So you can see those 4 time frames now, they all serve a purpose for just one particular one trade. So you don't just rely on one time frame when you want to enter a trade. Depending on the kind of trader you are, you rely on the multiple time frames. I hope you understand that.
Yes,
So,
I
all
think
right.
I I pick a point here. I pick a point, and I
Okay.
hope to learn more.
Of course. Of course.
Thank you.
Yeah. So I think that'll be all for tonight. The next day the next day of the class will be communicated to us on the channel. Please try to be available. I hope to see more people on the channel, and the classes will be held mostly at night from 9 p.m. because some of us have other things that we are doing. We work, so even not just me, some of you might not even have time during the day. So at night, when everybody is back home about to sleep and rest, and here is a good time for everybody to settle down and actually learn these things. You understand? If you want to go into trading, you must be ready for sleepless nights. When others are sleeping, 1 a.m., 2 a.m., 3 a.m., you'll be awake, looking at the chart, back testing, doing all that. So I just wanted to just apologize. If there's anybody that is feeling tired and sleepy, there are going to be more of this to come, just so you know.
Okay, guys, thank you for joining today. This will be the end of the class. Stay tuned. The next class will be very, very important, and all information will be communicated in the group chat. Cheers. Enjoy the rest of your night. Bye. And there's a recording, right? I'll pin the recording to the group chat. So if you miss the class or you're having network issue, you can always revert back to the recording and listen to the recording. Enjoy the rest of the night, guys. Bye.